So mortgage rates are down. Looks like they've come down to what, almost 6.25. So this is the lowest since December, I think, right?
And actually, I mean, we've seen it down to 6 1/8. Nice. Which it's about a half a point drop.
Yeah.
In rate over the last couple of months. And it's a little odd because people look at it and are like, well, why is that happening?
Right.
The Federal Reserve, if we needed the case that the Federal Reserve is not truly tied to mortgage rates, this is it.
Right, sure.
They're not going anywhere on the federal funds rate. They don't plan to go anywhere on the federal funds rate right now. We see no reason to be in a hurry. Chairman Powell keeps saying. So yet rates have come down.
Yeah, and that's a really good point you bring up, because everybody always thinks that when the federal funds rate drops, so do mortgage rates. And while that's not untrue, there's some correlation there. There is no direct correlation. And Powell has come out recently and said, look, we're not in a hurry to go anywhere with the federal funds rate. We're happy where things are. We're seeing inflation come down, and we'll hold here as long as we need to. And mortgage rates are coming down. So that means that there's no direct correlation there. And the bigger overarching point is, who cares why rates are going down? They are going down.
Right.
And, the phone for us is ringing a lot more now that they're coming down.
Yeah, it is increasing, the business. It's not taking off. It's not skyrocketing.
Right.
We did see a blip in business. It was back, rates came down, under 6%, under 6, we saw a blip in the market.
Yeah.
But there's several things going on. First of all, people really should understand that mortgage rates, they kind of follow the 10-year bond.
Yeah.
So the 10-year Treasury bill, whatever that's yielding. And right now, that does well when, and what I say does well, really the yield doesn't have to be as much. Meaning the rate attached to it doesn't have to be as much.
Right.
Because mortgage-backed securities and 10-year bonds, they compete against each other. They're both long-term investments. They're considered stable, and if things are wonky and crazy in the market, then that's the place to go.
Yeah.
If I'm retiring, in 10 years, then I want to have more of my stuff, safe stuff like bonds and mortgage-backed securities and that sort of thing.
Yeah, less exposure to high risk, quote unquote, investments. Yeah.
So we've had no real Fed, the Fed hasn't met and said, we're dropping rates. And they're saying, in fact, we're not going anywhere.
Yeah.
Yet rates have come down because of other market factors that are out there.
Yeah. And you always have a great quote when you come and teach our real estate team once a month on every third Tuesday from 9 to 11.
Right.
And that is that rates take the elevator up and the stairs down. And so what did we see? We saw rates in the 2s and the 3s, just a handful of years ago. And then all of a sudden, boom, here we are at 7.
Yeah.
And I think a lot of people thought that they were going to come right back down just as fast as they went up.
Yeah.
And, fast forward now 3-4 years later, that's certainly not been the case. So really, I'm curious your thoughts as to seeing rates in the low 6s, 6 1/8, 6 1/4, whatever it may be, on a day-to-day basis or even an hour-to-hour basis. What do you think that's going to do as far as the market's concerned? Do you think this is going to give a big uptick? Do you think it's going to give a slight uptick? Do you think rates need to be in the 5s for us to see a massive uptick?
Well, here's the thing is that, let's say you go to Target, something's 50% off.
Yeah.
You got to have that right now.
Have to, yeah.
And in fact, you may not even need it, but you're going home with it because you're like, when's it ever going to be 50% off again?
Oh, my wife will come home and say,
great.
look how much money I saved us. And I was like, well, if you didn't buy it at all, you would have saved us even more.
100% then, right?
Exactly.
That's a theory a lot of people don't get. But hey, but let's say that same thing over time, over a couple of months or maybe even years, it comes down 50% a little bit of the time.
Yeah.
There's not as much rush to buy that. Number one, heck, it might go down more tomorrow.
Exactly.
It might be, 10% off today and 11% off tomorrow. It's slow progression. Like, there's not a blip in the sales because it's happening slowly over time. And that's kind of what's going on. It's been a couple of months. We've seen that's significant.
Yeah.
But really, we're not hitting the magic number, which seems to be 6 or below.
Yeah.
And that's what caused the market spike that we've seen.
Exactly. And yeah, that anything with a 5 in front of it, I think, is really generating a ton of buyer interest, and that's where you're seeing the market get flooded. And I think, something in the 5s is a healthy market, right? Because a lot of people wish for rates to be back in the 2s, back in the 3s, but the reality is, if you think back, you have to remember the whole story and not just parts of it. And the whole story is that every home that went up for sale was under contract within 36 hours, and it was generally 10, 12, 15% above asking price, waiving inspection, waiving option period, and buyers just ended up in a frenzy. And that's not really great for the market long term either. It was great for the people that sold in that point in time, except for the ones that had to turn around and then buy. They had to compete against that when they were buying. But it's not a healthy market when rates are that low and the demand is so high that I've talked to agents on our team that were doing a lot of business back then, and they said we were one of an average of 17 offers per home. Yeah. It's great if you're listing a lot of properties, and that's what I try to focus my business on, is listing heavy. I still obviously work with buyers, but if you're a buyer's agent, a lot of newer agents are working with a lot of buyers until they can build up that sphere. They're struggling to get an offer accepted at those rates. So to me, 5s, high 4s, that's a great, healthy real estate market.
That'd be great. But what's keeping the market from taking off at 6 and 8? We've got a lot of stuff going on. Unemployment is up. Consumer confidence is down. And then you got the Karate Kid thing going on with tariffs. Like tariffs on, tariffs off, tariffs on, tariffs off. Like Mr. Miyagi's over there going, I don't know what's going on.
Trump is like Miyagi with the tariffs.
And it's like, people are uncertain of what's going to happen. They don't know if they're going to have a job. Yeah. They don't know, if their savings is, like there's so much out there that people are not jumping at, these lowered rates. Right. Right now. And you're right, 4% would be awesome. You're probably going to be dead and gone before we actually see solid 4% rates. But hey, it would be awesome. And to be clear, if you get on the internet right now, you can go find a 4% rate. Yeah. You'll pay 1 million discount points to get there. But you can find 4%. Yep. Or you can find somebody who advertises 4%, and then you get, we just sold our last one yesterday. Yep. Sorry. Exactly. You're going to be 5.5 or whatever. And so, you just have to be an educated consumer to avoid some of that stuff. But nobody's really jumping. I don't want to say nobody, because mortgage applications are up. Yeah. But inventory is also up. Right. So we've got marginally more buyers, but we're starting to get, and really what's happening is all those people that bought during COVID, thought, I'm buying my dream house. Right. This is awesome. Well, those people, they had a couple more kids. And now they got kids sharing a room, which in today's society, share rooms, what's that all about, right? Right. And so now they need a bigger house.
And I always took issue with that term dream house anyways, because there's no such thing. It's the dream for right now. And as we go through life, I'm 36 years old. I'll be 37 next week. And my dream at 18 was vastly different than it is now, and it'll probably be different when I'm 57. So,
that explains the gray hair too.
That does, yeah. Well, hey, at least I got some. So, right. But it's interesting to me to see as we enter the spring market too that the inventory is up. It seems like in our area, builders are starting to pick up the pace a little bit as far as inventory homes are concerned. I visited with D.R. Horton, Lennar, with a couple different clients over the last few weeks, and it looks like their inventory is upticking, but at a reasonable pace. And then you also have your traditional retail sellers that are re-entering the market and saying, hey, I'm going to list my house. Don't know if it's a function of being the springtime, because that's when a lot of people like to list, or if it's got to do with these rates and they're seeing that the uptick in buyers is generating interest for an inventory shortage and they're trying to meet that demand. What are your thoughts on that?
So my thought is this. So first of all, if you look at the hard numbers with the builders, they are stacking inventory more than they have in the past, which causes them to panic a little bit.
Yeah.
And they're cutting prices, which is probably, that seems like a good thing right now.
Yeah.
And at some point, when you throw in the tariff issue with Canada, for example, lumber costs, building costs, they're not getting any reprieve on that.
Right.
And so that, that factors out there as well. But we've got a lot of pent up demand out there.
Yeah.
Because we've got all those people that are 3%, 2%, whatever, and they're saying, I'm not gonna buy a house at 6. I'm not gonna buy a house at 6.5. But they've said that for so long that now, wife, kids are complaining, and it's like, we got to get out of here, man.
Yeah.
I don't care about
if the rate's 10, we're getting out.
Yeah, exactly. We got to get out. And so we're starting to see some of that. But the reality is that it's actually, I know we always say this, it's a great opportunity.
Yeah.
Because the buyers aren't taking advantage of the opportunity yet. Now they will, and especially once we drop below 6.
Yeah.
And they will take that opportunity. And then maybe it's not 17 offers, maybe it's 12.
Yeah. And I will say that every single deal that I have under contract right now for buyers has a minimum of $10,000 in concessions from the seller towards their closing.
Yeah.
That's when people talk about opportunity, you have to look at the grand picture as a whole and not just what you're buying or what your interest rate is rather. What price are you getting the house for? What are you able to negotiate from the seller? How many offers are you competing against? Are you able to put that 10-day option period in there for a price of $200?
And for us mere mortals,
a
seller concession of $10,000 just means you're bringing $10,000 less to closing.
Exactly. That's $10,000 more in your pocket on closing day.
And I mean, we can't all be super agents like Steven.
Well,
I'm just messing with you. But honestly, that's one of the things that's happening is, they're throwing money at people like, hey, buy my house.
Yeah.
Heck yeah, we'll do $10,000 or $15,000 in seller contributions to your closing costs.
Just please buy the house.
Just please buy my house. And because they've got to move for whatever reason, they're moving out of town, or they're maybe they're downsizing or whatever. And I think as rates come down too, we'll see another segment that's out there. Yeah. Like I've had this conversation with one of your coworkers who sold me the house we're in now. Several times. It's like, well, yeah, it'd be great to not have as big a house and not have to take care of the pool and all that other junk. But what am I going to buy?
Right.
I mean, my payment is going to be marginally less.
Yeah.
But as rates come down more and more, that will ease itself, and that'll help us in the market, I believe.
Yeah. I was actually just sitting up last night, tossing and turning, thinking about poor Mark and his big house with his pool and what he does with all that space. And I'm very concerned. But so crystal ball time. When do you think we're going to see the federal funds rate get cut? I know there's a couple meetings throughout the spring and summer. Do you think that we're going to see? You think Powell's just really set that he's going to just chill for the moment? So guys, before we finish up this video, I saw a statistic that is very concerning, and that is most of you that watch our videos are actually not subscribed to our channel.
Yeah, what's up with that?
Guys, if you're finding value in these videos, it costs you nothing to subscribe. We're on a mission to get to that 1,000 subscriber mark, and everything you do to help us in the process is vastly appreciated.
Thanks a lot for watching. I think he's got to chill for a while, and a while, I think, means this summer. I think as the summer comes, most indicators are saying like, yeah, we see 2 rate cuts this year.
Yeah.
They're probably a quarter point each. They're not a half. They're not 1. There's been discussion of going the other direction at times.
Yeah.
I don't think they're going to do that.
No, I'd be surprised.
But I think we'll probably see one mid to late summer and another one, in the fall.
Yeah, and that's a realistic outlook, because I had a client literally just yesterday say to me, I'm thinking about refinancing at the end of the year. And I said, well, I know what her interest rate is because we've talked and I've helped her do business before. And she said, my interest rate's 4%. And but I think Trump's going to get it back down to 2 before the end of the year. And I said, okay, let's pump the brakes. That is so vastly off from what is more than likely to happen that, I think we need to have a little bit of a reality check. Your 4% rate is really good. I don't know if you've got enough years left in the tank to see it get back down to 4%. So you're
Yeah.
probably going to pay this bad boy off before you refinance.
And an interesting perspective for you that a friend of mine threw out the other day. And, Trump he's a real estate guy,
Yeah.
right? And he also understands that a significant portion of our economy is based on housing.
Yeah.
And so he wants rates to come down. And Powell, of course, is like, well, we're just sticking where we are, steady Eddie, we're not going anywhere. But what Trump has effectively done is he's brought down the 10-year bonds
Yeah.
through some of his other actions. As he's done that, which has helped ease mortgage rates. It's not directly, Trump is not waving a magic wand and all of a sudden, 10-year bonds drop. No, that's not how it works. But the net effect of some of the other things that he's been doing, and other market factors too,
Yeah.
has brought that 10-year down and given him essentially what he wanted.
Yeah, and I think honestly it's a good dynamic between Trump and Powell, and I don't think a lot of people necessarily see it that way or consider it that way, but one of the beautiful things about our country is you get somebody like a Trump in office who's, we need to slash interest rates, we need to impose these tariffs, we need to do all of these things. Mm-hmm. It's good. I mean, it excites people. They're, the people, especially his base that supports that, is very happy with it. But the system of checks and balances is a wonderful thing. And you have somebody like Jerome Powell that can counteract that and say, yes, we obviously understand there's an issue with affordability in housing, but we can't do it, at the drastic levels that you're talking about. Because the reality is, a happy medium is probably a healthy market, and when you get those two push-pull, the dynamic going on there, you actually end up with a good end result.
Yeah, absolutely.